Voy a cambiar a español rápidamente para presentar a Wenyi, que entiendo ya está en el backstage lista para arrancar. Entonces, me encanta cerrar hoy el evento, la parte abierta al público, con una mujer que está cambiando la manera de construir empresas, de construir proyectos que crezcan en la región. Wenyi es la fundadora y CEO de Polymath Ventures, un company builder que sirve a la clase media y baja desatendidas en Latinoamérica. Antes de fundar Polymath, ella ayudó a construir un fondo y fue investigadora publicada de física aplicada. Trabajó como consultora en McKinsey y bueno, su experiencia viene de Silicon Valley y desde el 2012 ya Wenyi se ha centrado en la consolidación de Polymath, donde ha fundado más de 9 empresas y ha recaudado más de 30 millones de dólares. Durante esta conferencia, Wenyi nos compartirá los aprendizajes luego de haber pasado por más de 30 rondas de levantamiento de capital. Entonces, quiero que le demos la bienvenida a Wenyi Cai de Polymath Ventures. No sé si, Wenyi, if you're with us, let us know, and the stage is yours.
Thank you. Thanks for the generous introduction, and thank you all for being here. So today I'm going to talk about a topic that is very important, which is fundraising. And luckily or unluckily, I've done 40 rounds of financing at Polymath for both Polymath as well as our ventures. So I think there's quite a number of lessons learned. Latin America is not an easy fundraising environment. It's still very early. And so I think that through our experiences in the last 8 years, we've also seen the fundraising environment evolve. I think the last couple of years have felt very, very different than the previous 6. But some of the lessons I'm going to talk about, I think, apply not only to the region in its current state, but probably in general for fundraising across the world. So I want to, before I begin, I'd love to just thank the organizers and Fernando for everything that they've done to put on the event. And so we're very happy to be here and to support and to interact with you all. So just a little bit of background on Polymath itself. Polymath is a venture builder, so it's venture studio. We build companies from scratch for Latin America, particularly to empower the middle class through building digital platforms that give them access to better quality products and services, as well as income generating activities. So over the last 8 years, we've generated over 200 concepts, built 9 ventures. 6 of those ventures are still operating in our portfolio. And we've raised over $35 million in equity. We've raised more than that if you were to include debt and other instruments. And there's around 250 people that work across the group at Polymath and in our ventures. Today, if you look at our portfolio, it spans from fintech to mobility, commerce, prop tech. So we touch the majority of large pockets of spend for the middle class. We're not going to get into our companies here, but one of the things that distinguishes a studio model is that these companies are started from scratch with in-house at Polymath. So we go out and understand the needs of the demographic we're serving and design the businesses and help form the founding teams and work alongside the founding teams in the launch of those projects and evolution of those projects. And some of the businesses we've started are now in a growth stage past Series B. And we are in the process right now of building 2 new ventures that started in the second half of this year. So fundraising is an ultra marathon. At Polymath, Over the last 7 years, we've completed 40 rounds of financing across the group. That means we've generated 6,000 investor leads and probably done about 2,000 pitch meetings. And we've raised $35 million in equity. So if you were to synthesize the impact of these numbers, the word to take away is grit. I have not personally taken all 2,000 meetings, but I've probably pitched 800 to 1,000 times since starting Polymath. Some of those rounds were very small, initial rounds with angels and friends and family, and some were formal multi-million-dollar institutional rounds. What I want to say with these numbers is that there's little glory in fundraising. So no matter what the media portrays, this is a bare fist fight in the mud. And what I want to share today are some of the key lessons that I've learned through the blood, sweat, and tears of that fight. Lesson 1, fundraising is hard. Don't be fooled by the news and feel as if everyone is raising except you. It's like high school. So given the incentives of disclosure or non-disclosure, it seems like everybody's having sex besides you. So if you really speak to almost any entrepreneur honestly, they will tell you that fundraising is damn hard, and it's probably the hardest part of their job. Lesson 2. The 6% rule. So over and over again, entrepreneurs who have tracked their funnel carefully have concluded the 6% rule. That means that out of 6 investors that you contact, only 6 will invest. So that means that most likely you'll get a no from an investor. So if you need 6 tickets of 100,000 USD, you need to speak to 100 investors who can actually write 100,000 checks. All of this to say, fundraising is hard work. It requires developing really thick skin and being able to deal with the many no's in a row. And really, there's no way around it. So that's lesson number 1. Lesson number 2, fundraising is a fundamental skill of a startup CEO. Of course, you can decide that you want to bootstrap your business and never raise money or raise very little equity capital, but chances are that you will need some type of fundraising through different parts of your business journey, whether in the start, to grow, to deal with tough times. So fundraising is likely an important activity to make your startup successful. It took me a really long time to actually fully admit to this fact. So I'm not a natural salesperson, I'm a problem solver, I'm an operator, I'm an innovator. But the sooner you realize as an entrepreneur or an investor, because investors also have to fundraise from other people, that knowing how to sell to fundraise is a fundamental skill. And the more likely that you will focus your efforts to learn it and to spend the right energy on it. Lesson 3, think of your investors as your customers. Most of us probably know a lot about being user-centric or customer-centric in building our businesses. I would encourage you to think about your investors in the same way. There are very different types of investors that prioritize fundamentally different things in terms of what they want to get out of investing. So some only care about returns, some want to engage with exciting new things, some want to give back and mentor the next generation, some want to feel important and heard, that their experience is useful in building the next new thing, and others want to have as much impact on as many people as possible. So it's very important to understand what is the most compelling part of what you're selling and figure out which investors is more likely to buy that thing. Let me give you an example. So even though at Polymath, we build businesses that have significant social impact, Latin America is not a place where global impact investors pay a lot of attention. So we don't sell our impact story. We talk about the market, the growth potential of our businesses. We sprinkle some nice human stories, but that really is not the main sell. So this is the basics of segmentation, right? As you would do any market segmentation for a product that you're selling. The additional thing I would mention here is related to personal connection. So at the end, investors invest because they trust you. So you need to understand each person, each institution, and as any good salesperson, build a relationship, make people feel important, make them feel heard. Nobody wants a transactional relationship. So build a relationship with potential investors as you would any customer-centric founder to your customer. Lesson 4, tell a story, a big story. So early stage investing is never purely about a financial exercise. I would argue that very little investing actually is. So there's a lot of unknowns, a lot of leaps of faith, things to be proven. It's not simply just about TAM, right? Total addressable market, or explaining how your product currently works. You need to do that, but it's really more about the problem you want to solve. The solution and even the market actually changes. But as a true entrepreneur, not just somebody who wants to say that he or she has their own company, at the end, you are driven beyond all reason to solve an important problem. And so this should be an important problem for the world and an important problem for you. For me, using myself as an example, despite all the challenges of building in Colombia and in Latin America over the last 7 years, and despite the fact that I'm not from here and my family is not from here, I feel that solving the challenges of the middle class of Latin America is my problem. Using this wave of technologies and methodologies to design solutions that really break the structural and persistent inequality, that's my type of problem. So tell your story, tell the story that really captures the essence of why you do what you do. Lesson 5. Why should you win? Right? A lot of people spend time talking about why the market's great, why the solution, but why you, why your company? After you've distilled your story to the essence, then you need to really think about the how. So it's not just about the problem and opportunity that you found or found you, but really to understand and be able to explain why you, why the product, why this team, why this company that you've built have a real chance of winning. What is your distinctive insight on the problem or solution? What is your distinctive competitive advantage that you've been building in your team? What is the basis of the loyal customers that you've been building? Why is your focus or the specific sub-problem and segment you're serving very well? Why is that the right way to enter and attack the problem? What are the current challenges and how you will overcome them? Lesson 6, manage a disciplined process. We've talked about the nature of fundraising as a job. We've talked about thinking about your investors as your customers and how to tell an authentic, audacious, and compelling story. Now let's talk about the process of fundraising. Don't leave something this important to chance. As you saw in the numbers at the beginning of the talk, we at Polymath have done our homework in terms of consistently raising money. And that means managing a disciplined process. So what does it mean to manage a disciplined process? The first step of that is actually understanding the investment thesis. So it means that you need to do the research to form a hypothesis of why an investor should invest in your company. For example, e-commerce will take off in Colombia in the next couple of years, and I want to bet on the best team in the market. So if you have that hypothesis, you can start building your story, building the evidence to meet that investment thesis. The second aspect is generating quality leads. So you need to hustle to get a lot of leads, work your network, work your network's network. And the third part is around qualifying those leads. So you don't have infinite time to spend with people who have more time than you to talk, right? And this is especially important in Latin America because people are not very good at saying no. So really figure out quickly the segmentation of investors that will invest in you and the key questions that you need to ask to understand if that investor fits into that segmentation. So for example, some key questions you could ask: what is your top criteria for evaluating a startup? Have you invested in startups before? How many investments are you planning on making this year? If an investor is not able to clearly and convincingly answer clear basic questions such as these, the likelihood that he or she will actually be able to cut a check quickly is very, very low. Fourth, create a timeline. So creating a timeline for yourself and your investors is really important. I think rounds of financing tend to take a very long time in Latin America. So that's something to adjust to, but it's still important to create these timelines for yourself and your investors. Set a closing date, push 1, 2, and then everybody over the line. My rule is that if I close 50% of the round, I'm gonna be able to close the full round. So, and people make decisions much faster when they feel that they might have a chance of missing out. So creating that urgency with deadlines, with grouping people together is very, very important to actually make the close happen. The last one is it's not closed until money is in the bank. So keep that discipline, keep building the funnel all the way through. So just because you have some people who are interested doesn't mean you should not be getting new leads, and continuously working all of the stages of the funnel. Even after people have told you yes, even after they've signed the paperwork, things happen. They've happened to us, they happen often. So a deal is not closed until money is in your bank, and keep your plan Bs and plan Cs active throughout. Lesson 7, each round is different. Just like what it takes to be a good student in first grade is not what it takes to be a good student in 5th grade or to be a star in high school, every successful financing round is different. So just because you raised a successful seed round does not mean that you have what it takes to raise a Series A without adjusting your strategy. The company is different, the market is different probably by that point, and the type of investor will be different. So a few very high-level definitions of what investors are looking for. In a Series Seed, what they're really looking for is an articulated problem and a good team. At Series A, it is about having product market fit. So it has to do with repeat usage, has to do with how important your product is for the initial customer base. So how much would they, how much would they miss it, or how much would their lives and work be affected if it were taken away? At Series B, you really need to already prove the scalability of the model. So there's a couple of ways in which you can grow the business reliably with strong unit economics. Lesson 8, sift through the noise to understand market feedback. One of the hardest things I find about fundraising, since you receive no's all the time, is that you really need to have very thick skin, right? To deal with the continuous no's, the 94 no's for every 6 yeses that you get. And also there's a lot of bad investors out there, right? They don't understand your business. They're probably never going to invest anyway. So what they tell you and about why they don't invest is actually not very valuable feedback. But it's also not a good idea to shut off all the feedback. Some of it can really tell you how the market views your business or the capability of your team or yourself. And so my advice is to really identify smart investors and those who want to help you, even if they're not going to invest in you right now. And whether they become your formal or informal advisors is a different story. But really, really identify who those people are and take their input. So write it down, think about it over time. You might not understand or agree with it right away, but let that marinate. No one really understands your business and your company as well as you. And not all the advice coming from somebody else, even somebody very smart, is going to be correct. But it really allows for these provocations to help you step back from the day-to-day. Because that's one of the challenges of being an entrepreneur. I find that the fundraising activity, although not fun, is an interesting way to step back from the day-to-day and hear different perspectives, and especially hear perspectives from people that have seen a lot of companies, seen a lot of trends, and see how that can help you see your business differently. Lesson 9, nothing beats building a good business. So we've talked exclusively about fundraising in the last minutes. Even though fundraising is a skill and a disciplined activity that a CEO needs to do, it can't cover for bad business performance. You can be a great fundraiser, and that does not cover for performance. So think carefully about how and when you go out fundraising. So if you go and fundraise when you have not demonstrated enough traction, you will end up spending and probably wasting a lot of time. This is actually something I see very often. We've also made these mistakes at Polymath where you need the money, and so you decide this is the right moment to fundraise. But actually you should fundraise when your business is ready for fundraise, not just when you run out of money. So especially when we're talking about Series A's and Series B's, make sure that the business and what you've demonstrated is actually a compelling sell before embarking on the fundraising pathway. Otherwise, I would encourage you to figure out ways to raise money in a bridge funding with existing investors, or reduce the burn of the company to extend the runway. So you need to prove a couple of those things before you go out and actually structure a proper round. There's really nothing that beats a good business. So those are the 9 lessons that we've learned, and hopefully this is helpful to the audience.
Thank you so much. It was, I think, the cherry on top at the end of this event, because it was very pen and paper. I was taking notes because it's not only for entrepreneurs and startups, but also for us at Wenyi Ventures. And I was just taking notes. I guess the audience was doing the same. We're gonna open up questions. We're gonna have everyone who wants to ask a question raise their hands if they have one. I ask that we do so in English so that we can do it directly to Wenyi.
Carmen, I'm okay if the question's in Spanish.
Okay, perfectly. So we can do it both in Spanish or English, and then Wenyi will answer in English, and you can use the translator to listen. So if you guys have questions, we're open to them. And if not, I have a couple, so let's just give it a couple of minutes to see if anyone raises their hand.
Looks like Ernesto and Mike have raised hands. And
yeah,
Santiago,
I see them.
Nenda.
Okay, so let me just look for Ernesto. Yeah, Ernesto, the floor is yours. There you go.
Wenyi, how are you? Nice to meet you. Great.
Nice to meet you.
I wanted to ask you, when you look for investors and look for leads, what is your strategy? Where do you look for them? You find them through LinkedIn, or do you do campaigns, or I want to know what's the process.
So I think that there's 2 strategies. I mean, we've obviously built a pretty significant database of investors, those who have already invested and those who we've interacted with and built a relationship with. So we start from our database. But I think that there's 2 fundamental strategies underlying that database. I would say probably 3. The first one is, as an entrepreneur, and I'm assuming that you are, you should always be networking, right? So people are generally not going to invest in you the first time they meet you. So I would say that, it's a minimum of 6 months of relationship before they will invest. And oftentimes I've had very important investors invest after 2 years of building a relationship. So I think the first part is, you need to it's not that you're always fundraising, but that you're always networking, you're always building that database. I think and a lot of times that comes through working your network and working your network's network. right? So that's one just networking aspect to it. But in terms of actually building a list, what we do is we do a lot of research. We do a lot of research about who has invested in what companies at what stages, and we categorize all of that. And then we always ask for warm intros. So we don't do a lot of cold LinkedIn. I don't think the response rate is very high. It's a lot of effort for not a lot of gain. So generally, I would say LinkedIn is very useful to find who is the secondary connection you can ask for the intro, but not directly via LinkedIn. That's been our experience. So we do a lot of research on kind of Crunchbase, PitchBook, whatever's available, these databases, and a lot of media crawling to see who have invested in companies globally that have comparables to what we're doing for that company.
Thank you. Thanks so much for the reply. We have 2 more questions. I'm gonna now unmute Mike, and after that, Santiago, and we'll close with that.
I think I'm unmuted now. Can you hear me?
Yeah, we can hear you.
Fantastic. Wenyi, thanks so much for sharing your experience. I feel like I picked up a lot of that. You had one specific thing that resonated with me. You said, if you go out fundraising before you have a lot of traction, you'll end up wasting a lot of time and money. I'm just paraphrasing, but I think that was about right. And I was wondering if you could quantify that a little, or if you had any things that you keep in mind where you think, yeah, this company is ready. They're ready to go out. I know there's different kinds of companies. Some have poor unit cost economics. Some have profits already, but I imagine you have some experience here.
Yeah, I would say that for each round of financing, Series C being the most divergent, I would say. But I think if you go to Series A and Series B, for example, you can probably do a round of just, kind of talking to friendly VCs to understand what is the metric they're looking at. So for example, I would say that for Series A, very generalized, but let's say for a Series A of a marketplace company, you need to have an annual GMV of somewhere between $1 to $2 million, right? There's some marketplaces with lower margins that would require more than that. But so I think it ranges quite a bit. Actually, the reference I would point you to is FJ Labs. If you're building a marketplace business, I think they give a pretty decent range of metrics for your GMV, for revenues, for take rates, for those. So I would say that there's probably a decent amount of material out there in the internet that tells you at Series A and Series B what people are really looking for, and then you should validate that for the specific business model that you're in with friendlies kind of in the industry. I think that for Series Seed, it is very, very unclear, because I think also a proper Series Seed fund in the US would have those metrics, but I would say in Latin America, there's not that many proper Series Seed funds. So it happens to be funded a lot by angels. And I think then people don't have a very clear criteria. I think at Series C, they're mostly investing in the space that you've identified and in the team.
Thank you. And for our last question, Santiago, I'll leave you to it.
Hola, Wenyi. Voy a hacer en español, ¿puede ser?
Sí, dale.
¿Qué tal? Bueno, primero felicitarte, muy buena tu presentación. Mi pregunta es un poco abierta, no sé si le puedes responder lo resumido, pero veo que están ya en Colombia, tú estás allá, que quisiera saber un poco cómo ves la región, más que nada para esta parte, esta etapa post-COVID, que nos toca a todos sudar un poquito más, y un poco desde tu perspectiva, ¿cómo ves el tema de levantamiento de fondos de nivel semilla, básicamente from scratch, en la región, y no sé si tienes algo de visión en Ecuador para que nos comentes un poquito. Gracias.
No, gracias. Voy a responder en inglés, perdón. Es un poco más fácil para mí. So I would say that overall, depends on what type of ventures you're doing. But generally, if you're doing a digital venture, I would say that post-COVID, the environment is quite positive towards it. So we've definitely seen a huge acceleration. So you read the reports of the acceleration. We've seen it in our own portfolio. And some are really obvious, like we have an e-commerce company that's taking off or has been taking off all year, basically, growing at 40% plus month on month. But we also had other companies like an auto repair company that's doing really well that you would think probably shouldn't be, but actually the digital, people getting more used to digital has actually increased our product market fit or accelerated our product market fit in that business. So we've seen that trend. So I think as long as you're doing a digital company, generally, except for a few specific industries, I would say that the average digital company in industries is doing better because of COVID. In terms of fundraising, I think it's really, really different or mixed. So what do I mean by mixed? I think it's much harder to raise seed capital. I think it is actually not bad to raise Series A's and Series B's. You're seeing some of these big rounds of Series A's and Series B's get announced in the last few months, and I think it will continue for the remainder of the year and into next year. I think the reason that people are, seed is very hard is because I think angels in general are not very open. I think the risk taking among individuals has decreased. I think if you're raising from a fund, I think that risk taking has stayed the same, if not increased. So I would say that my advice is keep the burn low and really build a very, very robust and resilient company in these times. I think if you're a good enough entrepreneur, you'll hustle your way to some money during Series Seed. Maybe it's not as much as you want, maybe not all at once. You will be able to raise it. It's probably going to be harder work. But I think you need to get through this period. And if you build something substantial enough, I think in the pre-A or A round, there is quite a bit of money at work. I was afraid that US capital was going to stop entering Latin America after the crisis, but I'm seeing a lot of US funds do deals. We're talking to US funds for our companies. They're very, very open. So I don't think the pipeline has been affected.
Thank you for that answer. It was just perfect way to close the event, perfect way to close your conversation with us. And I really loved having you, Wenyi, on the Opportunity Summit. Thank you so much.
Thanks, Carmen.
And since we don't have a chat here because of what we already discussed, we do have reactions. So I invite everyone just to either clap or send hearts to Wenyi, because I really, really loved having you here. Thank you so much. Thank you everyone at Polymath for making this possible.
Thank you, Carmen. And thanks everyone for coming to the talk. Good luck with everything.
Thank you.
Chao.
Chao. Gracias a todos. Vamos llegando al final del evento, de la parte abierta a todos los que estamos aquí, pero en la tarde tenemos una sesión intensiva con startups. 40 startups, como ya les comentamos, han sido seleccionadas para resolver sus problemas, para que los ayudemos, para ayudarlos a llegar al siguiente nivel en distintos temas, desde user experience, levantamiento de capital, finanzas, estrategia, arquitectura y tecnología, etcétera, etcétera. Creo que va a ser una tarde intensísima para todos los que hacemos Buen Trip, para todas las startups y los mentores que muy generosamente se han sumado a participar. Quiero dejarles con Pame. A mí no me queda más que agradecerles a todos, si es que por aquí queda algún speaker todavía, agradecerles y agradecerles a quien ha estado en estos 2 días como parte de la audiencia, que nos han tenido paciencia con los eventos que hemos tenido, pero creo que salimos victoriosos después de 2 días de contenido que no nos lo quita nadie. Así que Pame, te dejo para que cierres el evento.
Gracias, Carmen, y gracias, Wenyi, si es que sigues por ahí. Yo prometí al público que íbamos a terminar con una cerecita en el pastel y creo que cumplimos nuestra promesa. Estuvo muy, muy chévere y si es que, exacto, si es que hay alguno speaker en la audiencia todavía, muchísimas gracias por hacer un gran evento. También muchísimas gracias a todos ustedes, ya que han sido un público realmente maravilloso. Se han quedado con nosotros súper conectados con todo lo que estaba pasando y también he entendido muchísimo los retos tecnológicos que a veces puede tener el tener un evento en línea, pero que en realidad ustedes han sabido comprender muy bien y hacer un gran público. Entonces les queremos agradecer por eso. También queremos agradecer a Buen Trip Ventures y la Embajada y Consulado de los Estados Unidos en Ecuador por hacer esto posible. Y bueno, los que están todavía queriendo participar por el libro de Patrick McGuinness, FOMO, Fear of Missing Out, todavía tienen la oportunidad de participar. Lo que más queremos es que ustedes se lleven los libros, que no se queden, todos los que quieren que no se queden sin una copia. Como les comentábamos, tenemos 35 copias, de las cuales 5 ya tuvieron sus ganadores. Pero todavía tenemos muchísimo más, entonces si es que quieren seguir participando, escriban a opportunity@buentriphub.com. Repito, escriban a opportunity@buentriphub.com y cuéntenos cuál fue su speaker favorito, cuál es el tema que más les gustó, qué es lo que aprendieron en el Opportunity Summit, para que así nosotros los consideremos como participantes para el sorteo y el lunes nos pondremos en contacto con todos los ganadores. Si es que no quieren hacer eso, también lo que pueden hacer es compartir en sus redes sociales lo mismo, digamos, qué es lo que más les gustó, si es que tomaron una foto, que la suban y nos taguen en Instagram, Buen Trip Hub, o en Facebook también. Y así ustedes van a estar participando. La idea, como decimos, es que queremos que todos se lleven esa maravillosa copia de ese libro. Y bueno, sin más, último, agradecer a nuestros media partners, estas empresas que están aquí, fueron las que nos permitieron llegar a tantas personas, que tuvimos un público súper grande la mayoría del evento. Entonces, muchísimas gracias a todas estas empresas, a estos partners que conseguimos. Y con eso terminamos. Muchísimas gracias. Si es que quieren prender sus cámaras, hacer un aplauso virtual o ponernos reactions como qué tal les pareció, les agradecemos muchísimo. Y a todas las startups que tenemos mentorías, pues ya saben, a las 3 de la tarde nos volvemos a conectar con el link que es para eso específicamente, que no es este de aquí. Ya debieron recibir todas las indicaciones por parte de su correo, entonces nos vemos a las 3 de la tarde. Les recomendamos que se conecten un tiempito antes para poder comenzar en punto y así puedan aprovechar al máximo los mentores. Y con eso cerramos. Oficialmente se terminó. Para los que nos siguen escuchando, si es que quieren, puedo repetir de nuevo el correo donde pueden enviar sus comentarios de qué tal les pareció el evento, cuál fue su speaker favorito para participar por el premio de este Opportunity Summit, que es el libro de Patrick McGuinness de Fear of Missing Out, FOMO. Es opportunity@buentriphub.com. O si no, también nos pueden etiquetar en redes sociales y ya están participando.